Hello everyone, in this video we'll try to understand what the standard customer due diligence requirements of a corporate entity are. Primarily we would cover the entire standard customer due diligence process in detail. In a layman terms, customer due diligence would involve verifying a customer's identity, understanding the business to assess the level of risk they possess. You may refer our videos on customer due diligence to understand when customer due diligence is performed, the type of customer due diligence, and difference between enhanced due diligence, standard due diligence, and simplified due diligence. So this video will also help people who want to understand more about corporate KYC, what are the requirements, and if somebody is planning to get interviewed for a KYC role, this would be really this video would come really handy. And if you're watching this video or you are on a channel for the first time, please subscribe for more video on email and KYC concepts. And if you have any questions or feedback, please share your comments. So let's get started. Uh, if we look at the standard KYC process, it can be segregated into following six main elements or components. So I have segregated into six main elements or component. Like some would segregate into four, some will segregate seven. It all depend on like different people. But if I look at FATF or the way the CAMS is being, if you look at the CAMS study book, so they also talk about the mainly six main elements. The first one being identification and verification. Here we identify and verify the identity and legal existence of the customer. Understanding the customer profile mainly comprises of mainly comprises of understanding the ownership structure, nature of business, purpose of relationship, and so on. Identification of associated parties. This would include identification of UBO, key principals, immediate parents, etc. Screening. It's about name screening, customer screening, and adverse media check on the customer. Its ultimate beneficial ownership, other associated parties, risk assessment. This would primarily comprise of identifying a risk presented by customer basis the information captured. Documentation, it would be the evidence which is saved to keep the record of action or assumptions. Now let's get into more detail of all these components. First, let's try and understand what does identification and verification mean. The identification and verification, and normally we call it ID and V. It's a nomenclature which we use in banks. It is a very critical component of an effective customer due diligence process. Identification of a customer is followed by verification through official documents and record. And this is the first step in customer due diligence process. So here we are required to identify and verify customer, I would say the corporate entity name. So that can be a legal name, trading name, previous name, or any doing business DBA, which is doing business as. It is important to identify and verify the correct legal name of an entity to differentiate it from similar sounding organization. Also, Trading name, previous name, or aliases are important when we perform name screening, as organization may be known as other name previously and change their name once it is listed in any of the blacklist. Then another component which we identify and verify about our customer is address. And it can be registered address, country of incorporation, country of operation, business address. Company may have different registered address and principal place of business. In such case, it will be important to capture both the principal place of business and registered address. Will help the bank to understand that they are not getting into relationship with a customer who is operating from high risk or sanctioned country. Also, majority of bank do not accept PO box address for the obvious reason. Date of incorporation, it's a simple date when entity is incorporated, and it comes handy when we are looking at organization with similar name. The date of incorporation can help us to identify the correct customer, or probably a customer who are applying for a business account. Then comes a registration number, or it can be a unique identifier, where we would verify a legal registration number. It's a unique number assigned to an entity in its country of jurisdiction. It may be tax identification number or any other business number issued by a company registry. A legal existence of an entity. Here we try to ascertain if corporate entity is still active or not, or whether it has been dissolved or under the liquidation. So if an entity is not active, then it make no business sense to open a business account or continue a relationship with the customer. Now let's also understand some of the verification sources for a corporate entity. However, you may find minor changes in the way each bank prioritize one verification source over other basis their policy, procedure, and jurisdiction. Some would segregate these sources as primary and secondary. Now let's understand some of the sources which can be used for corporate entity. So they can be independent and reliable sources, such as company registries in the country of incorporation, government websites, certificate of incorporation, memorandum of association, article of association, local as well as global data provider such as LexisNexis, Equifax, DNB, WorldCheck, RDC, etc. At times when data is not readily available through independent and reliable sources, bank also rely on customer email and statement to gather information. And some bank also consider a company website if it is listed on recognized stock exchanges. So once we have performed identification and verification of a customer, and we are certain the customer is who he say he is, the next step is to gather more information to understand the customer profile better. And the one of the important step while we understand the customer profile is to identify and verify the identity of the third party. If your customer is acting on behalf of third party, the third party can be individual, entity, people who we called gatekeepers. such as chartered accountants, lawyers, etc. One of the regulatory requirement is to identify ultimate beneficial owner or UBO. Identification and verification of UBO is important for a bank to initiate relationship or discontinue business relationship if customer or UBO is involved in or rated high risk for altogether different reason, which can be being in a high risk country, part of sanction or blacklist, etc. And while mapping UBO, there may be a chances that we are able to identify 85% of the ownership, and the remaining ownership is not easily available through online approved sources. In such cases, we may perform client outreach to provide complete detail of ownership. Identifying UBO can be little tricky when there are multiple layers or involvement of complex entities like trust or charities within ownership structure. We'll cover the concept of ownership structure through different video in more detail. Now let's move on to the next component, which is nature of business. Customer may carry different level of risk depending on the industry or activity or services they provide. Understanding the nature of business comes handy and one of the critical factor during customer risk assessment. In order in order to understand the nature of business, we need to understand products sold by the customer, services provided by the customer, total turnover of the customer as well as average turnover for last 5 years. Country-wise turnover, countries where turnover is greater than 10%, name of the main supplier, percentage of the total turnover, investment portfolios, nature of relationship. The next important aspect is nature of relationship. It is important to ascertain the nature of relationship with customer. Is it a credit card account, trade finance, checking account, etc. Bank would also determine whether product or services requested fits within a customer nature of business. Basis the product opted by customer, risk level would also differ during the customer risk assessment. Identification of source of fund. Source of fund refers to the origin of a particular fund or any other monetary instrument which are the subject of transaction between banks and the customer. Understanding a source of wealth is the cornerstone of a due diligence process, particularly for the ultra wealthy whose transactional behavior is often of much greater magnitude than those with lesser wealth. Normally, this information would come from the client itself, but it would important to understand source of funds are the proceed from customer business activities, any other source of fund other than business activity, suspicions about legitimacy of customer source of fund. Another important aspect is source of wealth. Source of wealth is distinct from source of fund and describes the activity which have generated the total net worth of a customer both within and outside of a relationship. Those activities that have generated a client fund and property. A source of wealth is not general uh, customer due diligence requirement. It is only required during enhanced due diligence. To establish source of wealth, one must look further into customer past. The identification of source of wealth can be identified into two parts. First, it is required to obtain information or estimation of net value of customer net asset and property. Second, it is required to create insight into the activity that have generated this total net worth. Now, we understand the customer profile. The next step is to identify next step is to identify and verify associated parties. Identification and verification of associated parties would include but not limited to beneficial owner, key individual or principal, intermediate holding company, guarantors, and collateral providers. The key individual or principals are employee chosen to control and govern the daily business activity of a legal entity. For corporate entity, these are the member of board of directors. Individual that need to be identified are CEO, CFO, treasurer, chairman, and equivalent roles. For the individual identified as associated parties, the detail which need to be captured are full name, date of birth, the country of residence. The source to verify the information can be through publicly available and reliable sources, so which can be government registries, article of association or incorporation, a letter from a company listed on approved stock exchange, company website. Now let's move on to the next component, which is screening. We call it name screening, customer screening, and this is primarily screening is primarily done by checking the identity of the customer, its beneficial owner, main principal, and other associated party against the screening list. The third party service providers such as WorldCheck, RDC, etc., where we can screen the customer and its associated party. Depending on the bank policies and guidelines, the screening result may, may remain valid for 6 months or 9 months or a year. And we already have a separate video on name and customer screening. You may refer it for more detail. Now let's move on to the next important component, which is risk assessment. The customer risk assessment must be a risk-based approach and carried out using customer risk assessment model based on identification of high risk indicators and red flag. Some of the red flag will be identified during other KYC processes like transaction due diligence, customer activity monitoring, etc. Normally, the risk assessment model would have a risk factor and sub risk factor already defined in the methodology. For example, entity type risk, country risk, industry risk, product risk are four high level risk factor which are part of the customer risk assessment model. The risk classification can be high, medium, low, and the risk classification will drive the frequency of future periodic review to be performed on the client. And in case the risk level is identified as high, the MLRO or compliance officer has to be contacted and provided with a clear rationale behind very high risk levels. And the last component of the customer due diligence process is documentation. Once we carry out customer due diligence process, we need to ensure that we are able to present this knowledge of a customer in clear, comprehensive, and consistent manner. This comprehensiveness and consistency is important for both internal stakeholder and for demonstrating our approach to external stakeholder such as regulators. This customer due diligence document or a folder of each customer should clearly demonstrate the information and documentation obtained during the CDD review and presented with maximum clarity and comparability. It is always good it is always a good practice that every document we save should have clear description of its type and purpose, which is mentioned on the first page. And if document consisting more than one page, should have short content list with relevant pages and key information on them, and that too on the first page. And if the document is translated, then it is advisable to mention a source of translation and section which have been translated with the purpose. Another good practice in documentation is to follow naming convention. This help in identifying the relevant document as well as save lot of time which you may spend in identifying a document in absence of no or proper indexing. So this is all about customer due diligence of a corporate entity or a corporate KYC. I hope you like this video, and if you have any questions or any feedback, do let us know. Thank you. Have a nice day.